Fantastic. So let's make a start. So first of all, a couple of quick introductions. Hello, good morning, good afternoon, everyone. My name is Andrew Bernstein. I lead sales and partnerships here at SESAMm, and it's really great to be with you today. We really appreciate your time and for joining us here on the webinar. We know it's a busy time for everybody around various holiday seasons. As you can see, I'm also joined by our CEO, Sylvain Forté. So Sylvain, if you don't mind, it'd be great to have a quick introduction from your side.
Sure. Thank you very much, Andrew, and thanks everyone for joining. I hope you had a fun Easter period and lots of chocolate. So we're very happy to do this webinar. I'm Sylvain, CEO and co-founder of SESAMm. Co-started the firm around 11 years ago now. And just as a general introduction for those that don't know us, SESAMm is a company that is focusing on ESG controversy data. So we create data sets based on billions of documents from web data, news, NGO website, forums, etc., in order to capture ESG scandals that may emerge on companies and to track risks. And one specificity of SESAMm is that we do it on both public assets and private assets, as we cover more than 5 million different companies and infrastructure projects. So we're a team of around 100 people. We are based in France, but have offices as well in New York, in London, and in Tokyo. And we are backed by some major investors and have raised around $50 million. So we have been in this industry of ESG controversy data for quite some time. And we're now expanding our scope beyond pure controversy and towards other types of indicators, in particular UN Global Compact violations indicators, which we are very, very excited to present today. And yeah, it's going to be an exciting session, some elements showcasing what we have done on the product side, but also showing some results from our team studies, which are very interesting on this topic.
Fantastic. Thank you. Thank you, Sylvain. And just building on what Sylvain just mentioned, before we get into the detail of the methodology and the technology, it can be helpful just to step back and set the stage with a little bit of additional context. So as Sylvain mentioned, we're here today to talk about a topic that really sits at the intersection of ESG regulation, which I'm sure everyone here is more than familiar with, and advances in technology, which are moving very, very rapidly. And the topic, again, as we've mentioned, that we're going to focus on is how we use that technology to identify potential violations of the UN Global Compact principles using various AI and language model techniques, and using our core competency, which is around real-time controversy data. So we're hearing this a lot from our clients across public and private markets, supply chain risk managers, consultants, that it's becoming more and more important, but not just for regulatory disclosure under SFDR and specifically PAI 10, which we'll come back to in just a couple of moments, but for any manager who's looking to try to manage ESG risk in a more proactive and scalable way. So whether you're focused mostly on public or private markets, whether you're advising clients on ESG policies and frameworks, the underlying need is exactly the same. It's really around having the access to reliable, structured insights that allow you to act as early as possible with as much clarity as possible. And that's really the theme that will run through today's discussion. So with that in mind, I'm just going to share here how we're going to break down those items today. And here's how we've structured today's webinar. So I'll begin, first of all, by framing the challenge a little bit further. I'll talk in a little bit more detail about some of the limitations of more traditional disclosure-based ESG monitoring and where controversy data can help to fill that gap. I'll then hand over to Sylvain, who will walk through SESAMm's methodology in more detail, including how we apply various AI techniques to monitor those ESG, those controversy risk signals, how we map those various categories of risk to the UNGC principles. Sylvain will also share some of the research, as he mentioned, that we've gathered on companies, how they're distributed across the different types of risk, so low risk, watch listed, and confirmed violator categories, how those patterns vary by sector, and we'll also break down that data in a number of different ways. And then once we've been through the methodology and the data, we'll come back to walk through a couple of more practical case studies, so some real life examples to show how violations unfold in practice and why that ability to detect those potential risks early matters, and why that notion of of categorization and explanation matters as well. Okay, so that's the agenda. Those are the items that we're going to run through. I should also mention as well before we dive in here that we'll wrap up with we'll leave plenty of time rather for some Q&A. So please don't hesitate to drop your questions and comments into the Q&A. Following this discussion, we'll be following up with a recording of the webinar and an ebook with some of the detail that we mentioned during today's discussion. But we'd love to have your questions. We'd love to hear your thoughts as well as we run through. So first of all, a little bit of a high-level overview of the regulation here, the relevant regulation. We're not going to dive into this in much detail. Again, I'm sure that everyone here is at least somewhat familiar with these concepts. But really, the relevant regulation here, of course, is SFDR, and under SFDR's Principal Adverse Impact Indicator number 10, or PAI 10, as we'll refer to it. That principle really requires asset managers, especially those managing sustainability Article 8 and 9 funds, to disclose their exposure to companies who potentially are breaching the UN Global Compact principles. And so there are 10 principles that you'll see flagged during the deep dive into the methodology. So this is really a clear regulatory requirement, but as the title of this slide suggests, moving from the regulatory requirement to implementing this in practice is sometimes a little bit messy. It's not super straightforward, and that's the case for a few different reasons. First of all, most breaches, most violations of the principles don't necessarily come from company disclosures. They tend to surface through external pressure, so coming from media reports, NGO alerts, legal actions, whistleblower alerts as well, and those types of events tend to surface long before there's any formal recognition or acknowledgement by the company, by the violator company itself. Then add to that the fact that most UNGC violation data is updated only on a quarterly basis, so not particularly timely, and the combination of those two factors, you can really see the challenge. So by the time you get to know about a violation or a potential violation, the exposure may already be quite material, and these challenges are really amplified for private companies. As Sylvain mentioned, we work quite extensively with private market investors. What we're always told is that private companies often lack very much or any formal disclosure, so those challenges are really amplified. So with that in mind, this is where using AI and using a scalable approach really gives us a clear advantage. And again, as we mentioned earlier, we have the ability to scan through millions of public sources across over 100 different languages, so a huge amount of unstructured data. There's a ton of really interesting information there that we're able to make sense of. And it's important to say as well that we cover both real-time and historical data, which gives us the ability to look at trends and how they move over time. And what AI enables us to then do is identify those potential UNGC breaches much earlier on a greater scale than any sort of manual research or human analyst team ever could do, especially for large universes of public and private companies. And then beyond that, what AI also allows us to do is not just detect the controversy or not just detect the potential breach, but also classify it and provide an explanation. So what we do is we'll link an individual controversy event, a scandal, a potential violation of human rights, a lawsuit, to a specific UNGC principle. We'll assess its severity and how it's evolved over time, and then provide a clear explanation of why it may constitute a violation. So at the end of the day, what we're aiming to provide here is a structured set of data with context and insight, not just a huge list of red flags that you have to sift through manually, but really explainable assessments that you can use directly in regulatory reporting, internal risk reviews. So with that in mind, in a moment, what we'll then do is Sylvain will take you through exactly how the methodology works on our side, how we've trained the models, how we structure those risk categories and apply them directly to the 10 UNGC principles. But really, the takeaway, looking at this from a high level, is that what AI and language models allow us to do is to move away from a sort of reactive and manual approach to monitoring ESG risks, and then manually applying them to the UNGC principles. And what we're looking to achieve is a much more timely and consistent approach that's really designed to help support SFDR compliance and real-world risk management as well. So that's a little bit of an oversight what we've seen by talking to our clients about some of the challenges of going from that sort of manual reactive approach to more proactive detection and classification of UNGC risk violations. And so on that note, I'm very happy to hand over to you, Sylvain, to dive into the methodology in a little bit more detail.
Thank you very much, Andrew. I really appreciate the context. I wanted to give you also an anecdote from a study that was conducted by one of our clients and partners, EthiFinance, a leading rating agency, ESG rating agency in Europe. Because there is an underlying why element of what we're doing here is being a signatory of the UNGC and not being delisted doesn't ensure that the company is not a violator, doesn't ensure that it's safe to invest in that company. And we strongly believe and actually have statistical justifications to prove that external screening is absolutely essential. So EthiFinance looking at and really doing a manual work, analyst-driven work, interpretation work on UNGC signatories, looking at controversies and violations. They have highlighted that 68% of UNGC violators in the data set that they're looking at are actually signatories of the UN Global Compact and have not been delisted. And I think this is really, really important to note is any data set that relies on any type of company disclosure is limited in the sense that it doesn't ensure that companies are actually aligned with the UN Global Compact. And in some cases, there can be really major violations that would otherwise be missed. So this is really a why element of why we're pushing this type of approach. And we've had a lot of demand from various types of clients in the market, both asset managers and private equity firms, and also directly rating agencies and some of our other partners. So with this in mind, I want to introduce our methodology. It's an extremely strict methodology because UNGC violations go way beyond ESG controversies. These are extremely severe events. Violations have to be justified. They have to be explicit. They have to be severe. And so it goes beyond our traditional layer of ESG controversy where we flag any type of ESG adverse event that may have a material impact on the company or on external third party. So we have three different mappings, tiers of risk that we map against the UNGC's 10 principle. The first one is the most extreme one. It's called the violator event. So each and every event can become a violator event as long as it's actually breaching one of the 10 UNGC principles. And also it needs to be explicit, to be a severe breach, and to be demonstrated by strong evidence, such as either an official condemnation, a major fine by a regulatory body, for example, or an admission of guilt by the company. And so this goes beyond rumor, this goes beyond an actual scandal. There needs to be a very strong condemnation of this specific event, and it cannot be just a suspicion or an accusation. And as you'll see later, this concerns a small number of events compared to all severe controversies that SESAMm is capturing, and not all events lead to that kind of conclusion. The second layer, which is the medium level of risk, is the watch list event. So these concern potential serious violations of international norms, but the evidence is partial or inconclusive. And so the cases themselves suggest significant wrongdoing, but there is lack of sufficient proof to confirm a clear breach of UNGC standards. And so we would consider this a watch list event, and we would encourage clients to then monitor these companies even more closely, but this would not yet be considered a violation event. And lastly, we have low risk event, where there is no clear evidence of a UNGC breach. This doesn't mean that this does not correspond to an ESG controversy. Specifically, we have events that simply do not align with UNGC principles and that fall outside of that classification, and that therefore cannot be considered a watch list of violator event under this specific taxonomy of risk. And these events do not have confirmed misconduct, but they still warrant some attention. If they have made their way into that specific database and into that specific UNGC data set, it means that there is still a severe controversy that should be of interest to asset managers. And it's also important to note that here we're really looking at event level analytics. And so we'll dive more into what can be done from the perspective of translating that into a score and how that can then translate into a list of exclusions, which we know is what the industry is looking for at the end of the day. But one thing I want to highlight is that events are each specific and they tend to move in time. There tends to be development of a specific controversy cases across significant material update. And there's really a dynamic aspect to this. So a company's status as a potential violator, meaning there's an accumulation of violation type events, is actually not set in stone. And a company can be moved from violator to watch list or potentially from low risk to watch list. And this is really a dynamic environment, which also reflects the company's own evolving behavior, including the responses that they give and the collaboration that they can provide with regulatory bodies. Another thing that you see here on the slide, which is important in the methodology, is actually the justification or explanation. Because the reason that clients are coming to us in order to go beyond a simple exclusion list for SFDR PI 10 purposes is to actually be able to have a look at underlying events and understanding what is happening in the background. And for this, it's important to give access to content, which we do, but it's also important to explain the path that has led to that specific decision. And through the work in terms of methodology of our ESG analysts and through our AI processes, we're able to provide a specific justification for each and every event, and to also therefore provide an audit track and not just that list of exclusion. So you can see here an example. This is just a random example on Shein, which I think is still a private company. I think their IPO didn't happen due to controversies. And Shein actually acknowledged that they had child labor practices within their supply chain, and there were huge concerns which went beyond accusation. This was something where the company admitted guilt and admitted that there had been huge human rights violations. And the system is actually analyzing this and providing the explanation correspondingly in order to then justify that this event is a violator type event, not just a watch list event or a low risk event. So this is really meant to provide something beyond a black box approach, where you don't just have to trust a list of exclusions. You can really have a look at individual events and understand and deep dive into granular events, which are also provided at a relatively high frequency on a daily basis and allowing you to really check this on a regular basis. So I was hinting here also at the fact that here we're only speaking about events, and we'll be happy to speak a bit about company level exclusions as well, because everything that we're going to show is really there is a specific event and that specific event is considered violation, but what about the company itself? And so through additional scoring methods, we're able to go from an accumulation of events to saying that a company itself is actually a violator of the UN Global Compact or a potential violator of the UN Global Compact, because we know that that is the ultimate goal of many of our clients. And typically to do this, we would apply oftentimes a 2-year period, a 24 months period, during which we analyze the events of the companies, including past events, and using this in order to provide a global classification. And there are a lot of things that we have to be very careful with, including making sure that companies that are of a large size do not, through their abnormal size, accumulate too many violators events, which would lead them to be systematically classified as violators, and that would be unfair. That would be just a size bias or an industry bias in some cases. And fortunately, SESAMm has a lot of expertise with this, as we already have a controversy exposure score, so our own proprietary score from 0 to 100, which does that same job of aggregating controversies across all categories, implementing a memory effect and giving a simple and single score, which we can use as well in order to generate thresholds, for example, for exclusion. So I just want to bring that nuance, because here we're really going to talk about event level violations, but less about the company level exclusion. And so there is an additional layer on top of this, and we're working with a few select clients on that specific subject as well. So going to the next slide, I wanted to show you just the mapping that we apply. And so that means what are the events that would typically be considered under this UNGC principles taxonomy, as we would call it. So we have here human rights events, labor rights, and on the next slide, you'll see environmental and corruption risks as well, which typically align with these UNGC principles. So it is really important to note that these risks encompass only a small portions of SESAMM's entirety of covered ESG controversy risk. And so you can have a major and severe event that is not a UN Global Compact breach or UN Global Compact violation, simply because the risk category doesn't correspond to that framework. We have to align with it very, very closely. And so there can be extremely bad behaviors that do not trigger a UNGC violation flag. And this is something that is also worth noting, is that in ESG controversy taxonomy does not match 100% a UNGC principles taxonomy. So that being said, we still use our initial taxonomy in order to map the principles of interest. So for example, on human rights, that topic is typically linked to a sub-risk related to fundamental human rights, rights of indigenous communities, rights to properties, which SESAMM is covering as part of its off-the-shelf ESG controversy offering. But the nuance is that we need not only this risk to tie to a specific category of event, we also need them to be extreme, to be explicit violations, to be proven breaches of human rights in order to trigger a UNGC violation type event. So think of it as first a mapping exercise where we say, okay, what are the taxonomies of risk and specific types of risks that do correspond to UNGC type risk? And in addition to that, we have to assess how severe these risks are and how much of a proof that there is that these risks are actually material. You'll see a few other examples on the next slide. So typically environmental risk. Oh, sorry, the previous one, I was jumping from slide to slide. So on environmental risks, we have extreme environmental cases. For example, ecocides typically would fall under these UNGC principles categories, largely as violations when it escalates to that level. And so the structure mapping between SESAMM's existing ESG risk taxonomy and UNGC principles allows us to really perform this analysis at scale very rapidly and to adapt our existing data set to this need. Note though that it's not 100% matching that we can achieve. And so as part of the assessment and justification, we also make sure that we are actually mapping the right category of risk. And so we can use this assessment level and the severity enhancement in order to also check that we do the mapping properly and that these risk categories really align. Right, so let's jump to the next slide, which is very, very important, is we highlight here a bit more specifically the difference between a severe event under a traditional ESG risk taxonomy and an actual UNGC violation. So as you can see, actual violatory events represent a very, very small portion of the data set, even though we run that study on severe events from the perspective of ESG controversy. So just to come back to what we consider severity or intensity under the SESAMM framework, we would consider an ESG controversy event to be severe if there is actual impact on the company, like reputational impact, financial, operational impact. We would assess also the impact on stakeholders, volume of stakeholders impacted. Is it local? Is it just a specific subsidiary, or is it at group level? And also external stakeholders that may be impacted. And also what's the level of responsibility, legal responsibility, level of company's involvement, that may be negligence, that may be intentional. And so this is the type of framework that we use in order to construct our severity or intensity indicator, which is not specific to UNGC violation. But beyond this, in order for an event to be classified as a UNGC violation, there also needs to be an even more severe breach, and there needs to be demonstration of strong evidence as part of that specific event. So this is really the nuance. And as you can see, even if we analyze severe events, only a very small percentage will be considered a potential UNGC violation. So this is actually important. And from a client perspective, this is essential because typically UNGC violations are going to be used in order to construct exclusion lists. And it wouldn't make sense to exclude a large number of companies or very mainstream companies that are touched by some severe controversies, which are not UNGC violations. So only 1.6% of, in that case, the study was done on 2,000 events on large cap companies. Only 1.6% of the events are actually violation type events, which is a very small proportion considering we look at severe event. And if we translate that into a score, only 0.5% of these companies would then be considered actual violators overall when we aggregate all of the events, and would actually be linked to potential exclusions. And we're also able to map these 0.5% of companies to known lists of asset managers exclusions to make sure that there is no unjustified turnover in a portfolio. So it is actually a good thing that only a small number of events are categorized, and we really need to make sure that these are the right events, and this is really what the what the system is doing. In addition to that, there is really a big amount of work going on in avoiding biases. So remember that this is applied both to small companies and to very large companies. And so there is a size bias, there is an industry bias. We have to take everything into account. When we go from an event level violations to a company level violation, we absolutely want to avoid just excluding large companies due to statistical biases like this. And so we take this into account, and we perform a lot of studies, and we're still working with quite a few clients on that specific element and different methods to go from events to actual exclusion scores. There's also an underlying thing that I wanted to share. There's a broader topic, which is outside of the need to classify a small number of events as actual violations. We did some extensive work, including manual work, on understanding what are actual events that are considered violations by the system. We have fine-tuned this. We have developed specific models on this. And there is also a potential enforcement gap, actually. So the reality is that a lot of ESG controversies, including very major controversies, do not necessarily translate into regulatory or legal action and condemnations of the company. And so this is something that is a bit more troublesome, and that is more linked to the industry and companies in general. So for example, we see a lot of events related to labor rights, environmental risk, hundreds of flagged incidents that could become potential UNGC violations, but only a fraction of them lead to actual regulatory or legal risk. And so we cannot consider them actual violations because the level of proof, admission of the company, or actual fines paid by the company, for example, is not significant. So some example on this, on companies like Exxon or BP or Shell, these companies have faced multiple very severe lawsuits, regulatory scrutiny, but in some cases, for example, the New York City dismissed lawsuits against all firms, including potentially due to some lobbying actions. We can see that some legal barriers are shielding corporations from the consequences of becoming delisted from the UN Global Compact, or at least in the case of our external analysis being considered a violation. And we very much have to adapt to this and have to provide the data. But we found that conclusion actually interesting. It is not just a statistical element, but there are tangible consequences in the real world related to this. So one of the conclusions of the story that was performed by our team is that this also highlights sometimes a lack of consequences for companies that are exposed to major ESG risks, where they can feel a short-term significant impact on their market prices, for example, their ability to finance themselves, but it may not lead to very severe exclusion due to regulatory needs, due to sometimes the lack of enforcement. Right, so this was a start on the highlights from our team and the research insights, and I think we can go to the next slide, and we'll dive a bit deeper into what our team has found, and in particular what our team has found when looking at UNGC events across different sectors and industry. So what we're doing here is we're looking at the data that has been generated by our team and the product that we have launched, and we're looking across different industries at non-compliance with the UNGC. And in that first slide, we're going to look at all types of events. And so any type of events that can be considered under that UNGC taxonomy that we have implemented: low risk event, watch list event, and violator events. And on the following slide, we're going to look at violator events, and we're going to see some major similarities, of course, but also some minor differences that are interesting. So on this first one, we look at all events: violator events, watch list event, low risk events. And so we're not just looking at pure violations, but anything that falls under the UNGC classification. And we can have a look at the different industries and see the differences. in the types of events that are captured. The technology and software sector is particularly exposed, and this is no surprise, to privacy rights and labor rights issues. So there have been major scandals, ESG risk controversies, and actual fines paid by company, including very, very large fines paid due to data misuse, data breaches, GDPR violations, discrimination lawsuits, for example, in that industry. And this includes companies such as Meta, Apple, Alphabet, where there is actually a major event, there is admission of guilt, and there is a condemnation. And this is actually interesting. These are not companies that we would typically see as potential exclusions under UNGC frameworks, SFDR. And as you'll see later, and when we go to score, this is not the case, but it's interesting to see that some of the events that are targeting them are actually potential violations. We have some other industries such as specialized retail, where we see a lot of events related to child labor, modern slavery, especially through controversial suppliers. So we have companies like Skechers, for example, Inditex, Uniqlo, that are tied to controversial suppliers with allegations of forced labors. We have companies such as Amazon, which with a lot of mentions of being tied to trafficking of workers in Saudi Arabia, links to forced Uyghur labor. Again, here we look at all events, and so it doesn't need to be always a verified event or a lawsuit that has led to an actual fine for the company. We can be in the realm here of a NGO making a strong and significant accusation that already has material impact on the company. In the media and entertainment work, we see companies facing labor rights issues, harassment lawsuits, wage discrimination, for example. And in the automotive sector, for example, scandals related to emissions can fall under environmental categories, but we also see some topics related to labor practices, for example. And so now we have seen the types of topics we have across all levels of risks of events, not just violators, but also watch list events, for example. And we can compare this on the next slide to actual violation events. The first conclusion is that it's remarkably similar across a lot of the categories. And so that means that a lot of initial accusations, low risk and watch list event tend to translate at the end of the lawsuit, etc., into an actual fine, an actual condemnation, admission of guilt by the company, and can then translate into a violation event. And so we see the same patterns and the same behavior. And this is actually reassuring, not something that is surprising. There are a few differences, in particular related to environmental issues, which is outside of the oil and gas sectors and utility sectors. We see that there are actually way fewer actual condemnations and fines being paid than there are watch list events and low risk events. And this is the case particularly for banks, where the scales are a bit different in terms of these events in green that correspond to environmental risk. So there is a lot of scrutiny, there is a lot of lawsuits starting right now, and a lot of accusations in terms of banks being exposed to environmental issues. But the reality is that many of these events cannot be considered actual violations. There hasn't been a fine or there hasn't been a condemnation. And this is just a good segue into reiterating what is a violator event. So in order to be classified a violator, there is a very strict set of criteria. A specific event must be aligned with UNGC themes. If it falls outside of the taxonomy, it won't be categorized under the UNGC framework. There has to be admitted guilt, formal condemnation, a significant regulatory penalty, and the response to the company is also critical in that assessment. So the company being a violator has typically not announced or undertaken remediation efforts. So we take this into account as well. So this really goes way beyond media noise or even just day-to-day ESG controversies. These are a substantiated case with real-world consequences. So just a few examples. Again, the categories are similar, but the types of events and the actual events are a bit different. So technology, software, financial services, again, a lot of privacy rights issues. This is where the actual condemnations are actually coming, and some corruption scandals. So typically a violation type events is Equifax breach of 143 million users data. There has been lawsuit, there has been condemnation, there has been fine. This is something where the company has admitted guilt, Or another example is Goldman Sachs having been penalized heavily for corruption-related violations, with Goldman facing billions in fines for involvement in international bribery scandal. So we need to be at that level of event in order for this to be considered a violation. It's rare and it's focused on a small subset of severe events. In the media and entertainment segment, we see some events related to lawsuits, pay gaps, harassment when they are very, very severe. And in the oil and gas sector, which is actually particularly exposed to violator events, we see events such as major environmental violations or damage, such as Chevron's 740 million Louisiana verdict for coastal wetland damage, or their agreement to pay more than 30 million fines for oil spills in California, or a jury in California awarding 63 million for Chevron covering up toxic pit before sending land. So these type of extreme events tend to touch the oil and gas industry quite a bit, actually, in the data set that we analyzed. Again, remember that a company being exposed to violation events doesn't mean that the company should be systematically excluded. There is an other layer of analysis on top of that, where we have to say, these events are accumulating, they're abnormal compared to the size of the company. We have to eliminate all of the biases related to the company's size and sector in order to then include this in a potential exclusion list. SESAMm typically doesn't provide an exclusion list, but can provide relevant scores in order to achieve this for clients. And so as an example, I've mentioned before that we have some large tech firms that may be concerned by actual potential violation events. Doesn't mean that these large tech firms make their way into a potential exclusion list. That's typically not the case, as the level of controversy is not necessarily sufficient in order to justify this, compared to other companies like a Rio Tinto or a Glencore, where the accumulation of violation events is so extreme that they can potentially be considered violators at company level. And with this, I'll give you the floor, Andrew, to give some tangible use cases and actual events.
Thank you for that, Sylvain. Yeah, that was really great to move from the methodology. But thank you, Sylvain, for running through that in such detail. And as you mentioned, we thought it would be helpful to run through a couple of real life examples here. And actually, the example here that we've chosen of Rio Tinto actually goes to one of the questions that came through on the Q&A, which I thought was a really great, really interesting question. But just to provide a very quick background on Rio, as you would expect, everyone here is familiar with Rio Tinto, a sort of a giant in the mining sector, associated with a lot of controversies, so a high volume of controversy events. As you know, I won't read through each one of them here, but you can see very clearly they range from destruction of heritage sites, community health disputes, environmental issues. And as you can see, we relate those controversy events to the specific UNGC principles. So on human rights, principles 1 and 2, labor rights, principle 6, environmental responsibility and governance around principle 10. But this, what I want to do here is just focus very quickly on the bottom controversy on the list there, related to Rio Tinto admitting and paying a fine to the SEC. This was in relation to historical bribery case involving a consultant or a series of consultants actually in Guinea. I won't run through all of the details. All of the underlying content and text is available through the text reveal platform from various sources. So it's very straightforward to get the full context. But really, the underlying issue raised serious concerns around governance and corruption and so on. But you'll notice that this is not a violator, right? So this is a watch list, categorization, and this goes to one of the questions that was asked: is how do you, the questioner asked, how do you nuance the categorization between companies that admit wrongdoing and pay a lawsuit or pay compensation, and those that delay or deflect, who do not admit culpability? And so what the model here is doing is taking that into account and really taking into account rather the company's response. So what Rio Tinto did here is it actually cooperated fully with the authorities. It interviewed actually and fired the individuals involved in the corruption case, which was quite complex and multi-layered, and they took tangible steps to improve internal governance and compliance framework. So as a result of that, and again, by using language models and AI to distinguish between those different cases, we flag this event as, even though the controversy event is very serious, a very sort of severe, high intensity event, this is classified as being on a watch list rather than a violator for those reasons. So that distinction really matters. It reflects the role of remediation and acceptance of guilt, for want of a better term, in ESG risk evaluation. It's not just about the controversy itself or the volume of controversies, but whether the company really takes that level of accountability. So hopefully that helped to, with time in mind, hopefully that helped to address one of the questions that came through about how you distinguish between companies that act in different ways in light of a particular controversy or a particular scandal that may qualify or may be classified as a violation. The other example, this is really a contrast. After looking at Rio Tinto, this is General Motors. Again, I'm sure everyone is familiar with GM, and this really shows a useful contrast and quite a different output. Again, I won't read through all of the individual controversy events. GM is exposed to a high volume of controversies, and the incidents listed here include multiple product recalls, legal disputes, regulatory actions, potential anti-competitive practices. And so these are really material ESG issues and severe controversy events from a reputational, from an operational perspective. But despite that, these events were all assessed as low risk under the UNGC framework for the reasons that Sylvain outlined previously. So even though they raise really serious and legitimate ESG concerns, they don't meet the thresholds that Sylvain described and the process that we described for a UNGC breach. So what we're typically looking for, as Sylvain again mentioned, is that evidence of systemic or sustained violation of those international norms that map directly with the UNGC principles. So we're not saying that the low level of risk is immaterial. It just means that based on the structure and the scope of the UNGC principles, these incidents or these controversy events don't warrant that level of classification under the UNGC principle. So that's really a deliberate way, as Sylvain outlined, in terms of how the SESAMm model works. We're looking to really reduce the amount of information overload that our clients receive and really minimize and make that classification as relevant and as pointed as we possibly can. So we thought those are two really interesting contrasts, with Rio Tinto showing how remediation can affect the classification, whereas GM shows that despite a high volume of serious controversy events, it's really about the validity and the classification in relation to the UNGC principles. Fantastic, and I see that we're nearly at time. I may just have time just for one or two questions, Sylvain. If you maybe this one is Sylvain that you could answer. A quick question about how quickly does the breach detection tool surface material ESG issues during the due diligence process and for monitoring purposes?
So the data is delivered on up to a daily basis, so similar to our alerts for standard ESG controversies. We can also provide batches of data on a weekly, monthly, or even quarterly basis, but speed is an advantage here. We see a lot of data sets, especially when related only to exclusion lists, which do not include that level of frequency. And so you can end up with a company that is extremely controversial, very likely to be excluded in terms of UN Global Compact violation, but that can remain in your portfolio for 6 months or a year. So that daily data and the ability to go into granular events is actually quite essential, and we really wanted to bring this to market.
Thank you, Sylvain.
I see a couple more. Do you want to address this one? What's the process for integrating breach alerts into internal workflows, for example, alerts to portfolio managers?
Absolutely. That's thank you. That's a very good question. So for a given universal portfolio of individual companies that you cover, so as Sylvain mentioned, those breach alerts are updated daily, so they can be delivered via via email alert. Many of our clients want to receive that via data feed, so via API or flat file. So there'll be a systematic delivery of that data based on the universal portfolio of companies that you want to monitor. And then for any validation, those breaches and the associated controversy events can then be fully reviewed within the text reveal dashboards on a live basis.
And this actually also maybe relates to the next question on geographical coverage, source of data, particularly for developing countries. Just so you know, in terms of the product launch, we actually launched this with a few clients first, with API and flat file deliveries, and some of our first clients were asset managers focusing actually on emerging markets and notably on Asia. So this framework is applicable in the same way as our ESG controversy data to up to 100 different languages, our 4 million different sources, and it is universal in terms of company size. So we can apply this both to listed companies and to private company. We don't have a limitation there. That being said, we're rolling it out step by step for clients who are interested in this data set, first through flat files and API, then through dashboard. So if anyone has a specific use case or would be interested in accessing the data, please let us know, and we can put you on the beta list and on the list of clients having early access to this. Great.
Thank you, Sylvain. I know, Sylvain, if we have time for one more question, but we did have a question around the limits for the fines. So how do we look at the level of fine in relation to the potential breach classification? As with Rio Tinto.
Sorry, I'm not sure. In terms of the level of fines, there are no limits. So we assess the size of a fine. We actually extract the number, etc., in order to understand how material it is for the company. So it can be a 1 million fine, or it can be a 1 billion fine. In some cases, this happens across the data set. We will take this into account in order to create the justification and the actual scoring, violator exclusion, violator watch list, and low risk. And I think there was a question also on the duration for cases. Typically 24 months when we look at UNGC violation and translate this into scores. That being said, we have cases that can be longer than this. And you'll see that there is another announcement coming soon on cases where we're able to aggregate cases across multiple years of data. For example, a lawsuit that has developed over 1, 2, 3, 4 years. This is a separate announcement, and we'll probably link to a separate webinar, but we will keep you updated on this as well. And if you're a SESAMm client, we can also show you some of the dashboards that we have launched for this. And there was a question on getting access to data. Feel free to reach out to me, to Andrew, and to your account manager. We're very, very happy to show you the data live and provide early access if you're interested in it. Again, through flat files and API first, and this is going to be rolled out through dashboards next. Thank you very much for your interest. We really appreciate it.
I think, Sylvain, we've run a little bit over, but really appreciate everyone the questions come through. We will, of course, review everything, make sure that we've answered all questions, and come back to you individually if we have missed anything. And as I mentioned at the start, we'll be sharing a recording and transcript of the session along with an ebook highlighting some of the main points that we've ran through today. So if there are no further questions, thank you so much once again for joining us today on the webinar. We really enjoyed the discussion and look forward to seeing you soon. So thanks very much.
Thank you very much.